all of us in the payments industry that are facilitating electronic payments, we have one fundamental responsibility as companies. You help the businesses grow, and when you help businesses grow, economies grow. And when economies grow, businesses thrive. Essentially what we're offering the Saudi market is payments as a service, right? Serving the Middle East and Africa will learn some valuable lessons from the Saudi market because of the nature of the market. And we hope to take those learnings to the other markets in which we're serving customers.
Welcome to Couchonomics with Arjun. The show aims to unravel the layers of the fintech sector and the rapidly evolving tech startup ecosystem across the MENA region and beyond. I am your host Arjun, and I will be inviting founders, executives, investors, regulators, and other influential stakeholders to discuss and dissect the highs and lows of their own ventures and how they foresee the wider ecosystem evolve. Join us as we celebrate success and the spirit of risk-taking, the candid discussion that goes past the timid question and cautious answers. This show is produced in collaboration with Arjun, a reliable end-to-end payment solution that enables businesses to turn payments into a strategic growth driver. We're also brought to you by Lulu Financial Group, a global financial services provider headquartered in Abu Dhabi and operating in 11 countries. Finally, Couchonomics with Arjun Singh is brought to you by M2P Fintech, Asia's leading payment infrastructure company that enables businesses of any scale to embed financial products. Welcome to this episode of Couchonomics with Arjun Singh. I'm your host Arjun, and today I'm joined by Nandan Mer. Nandan Mer is the CEO of Network International, a leading payment processor, both on the acquiring and the issuing end in the region, and actually expanding quite rapidly in Africa. Prior to joining Network, Nandan was with MasterCard, Citibank, and Amex, and I'm actually very happy that he accepted the invitation to be on the show. So Nandan, thank you.
Thank you, Arjun.
I hope you're comfortable on the couch, as I have to ask.
It is a very comfortable couch. Thank you.
So I've got to start this off with a fact which you might not be aware of. I don't expect you to be aware of. But actually, Network has played a very important role in, I guess, my career in the Middle East, because I arrived in the Middle East 12 years ago on an engagement in a previous consulting avatar to work on the first divestment which ENBD did with Network. And I spent about 6 months of my life on that engagement. During that 6 months, we decided to have a baby, and 12 years later, I'm still sitting here. So I guess it's a good or a bad thing, but I think Network has a role to play in my career in the Middle East.
Well, it's a great thing because the Middle East is now benefiting from an enhanced, what should I say, talent pool that it won't otherwise have access to if you hadn't decided to work on the deal.
Well, thanks a lot. I'll take that as a benefit. So I know, these are short podcasts. We try to get to the point straight away. So I'm going to dive straight in if it's fine with you, right? So, digital commerce was accelerating even prior to COVID for a number of reasons: technology, consumer behavior, enabling regulation. And then the way I like to call it is COVID was the accelerant, right? It came and sort of accelerated. And obviously the initial acceleration was on e-commerce, which is sort of kind of tapered down. I think it's come down to a healthy growth rate. But we also saw a massive shift of what happens in-store commerce, right? People shifted away from using cash. People shifted away from using swipe cards and chip and pin to
Tap and go.
Tap and go.
Yep.
Thank you. What it also did was bring in a whole range of competitors, right? Either existing competitors who woke up to the opportunity and so obviously stepped up the mark, right? And some new players which entered. So there's hyper competition, right? Yeah. And as you guys were the leaders, right? How do you see all of this sort of play out, and kind of what sets NI apart, specifically if you take UAE as a region, or UAE as a country, to sort of continue winning?
Sure. So your observation is spot on, Arjun. And there's still, while the transition has accelerated over the past few years for the reasons that you rightly articulated, and of course COVID being the accelerator, there's still a long way to go. cash is still the dominant exchange of value for goods and services. It depends on which region you're looking at. In our region, on the average, cash is still used for 80% of all consumer payments. In the UAE, less so. In many of the other markets that we operate in, which I'm sure we'll get to over this conversation, cash is even more dominant. In some markets, as high as 95%. So lots of opportunity for growth. Secular winds are behind us because of change in consumer behavior. So I'd say that there's plenty of room for folks like us and our competitors, which we welcome. Competition is welcome because it helps actually grow the pie. Agreed. For electronic payments, right? Because, if you think about it, in any industry, any single company cannot take on the burden of, being the ecosystem or being the marketplace for any single goods, services, etc. So we're actually very pleased that there's increasing competition because we see increasing number of players that are helping in the transition from electronic payments, from cash to electronic payments. As you rightly said, network's been at it for a while, for the better part of 20 plus years.
Yep.
First started with ENBD, the journey that you actually helped begin. And over a period of time, it's had, a change of ownership, and now as a publicly listed company. The journey has only accelerated with time. So, we're fortunate that we operate in great markets like the UAE. We're fortunate that we're a well-invested company. So the way I look at it, I'm new to network. I'm the new kid on the block. I have the good fortune of leveraging some great tech that exists in the company. I'm good fortune of working with great people who are industry domain experts who've been in the industry for a while. And so I'd say that while we welcome competition, we're also ready for competition. We're ready to compete. We've had dominant market share in the UAE and many of the other markets that we operate in. In fact, if you really, you'd be very hard pressed to think of any name other than Network in Middle East and Africa that spans 50 markets, that has 150,000 merchant customers, that has 200 banks in its customer roster, and does the full range of services, whether it's serving small micro merchants, literally startups that were created a day or two ago, or even were born last week, to the more established enterprises that have been around for decades and are multi-market companies with very sophisticated needs, where we integrate very deeply into their ecosystem. So I'd say, look, in any industry, competition always keeps the market leader honest. And the way I look at competition is they do a great job of keeping us honest, keeping us on our toes, which means that we are innovating at a faster pace with increased competition than we have in our history.
No, I think that's a very healthy, I guess, healthy philosophy to have, which sort of brings me to a question, and I guess most of my audience would want to ask this question, right? So a few years ago, and I, in my world, decided to go down a strategy of cooperation, right? Where you actually helped enable the entry of three global giants in the space of payments, Arjun, to name one, Stripe and Checkout. Talk to us a little bit about what was the sort of the strategic thinking behind that, right? Sure.
So first and foremost, I'm going to give the credit for the thinking to my predecessor and the team that I have inherited. These partnership deals predate my arrival. But I think it was absolutely the right decision to make for the company for a couple of reasons. One, payments is both a very wide and a deep space. So we talked about the fact that payments has a lot of runway, electronic payments has a lot of runway for growth. And the burden, or I shouldn't even call it the burden, the onus of serving the market cannot be on the shoulders of one single company. In fact, in payments around the world, you will see that there's a lot more cooperation than in many other industries. And the reason that payment companies need to come together is because it's a very capital intensive industry. A lot of money goes into building the tech and building the connections with the payment infrastructure at the back end that is not visible to either the merchant or the consumer at the front end, right? These transactions flow in nanoseconds. It's a lot of magic that needs to happen at the back end at very high speed for transactions to connect from a point in the UAE to, let's say, an issuer in Australia as an example, or vice versa. And then there are multinational companies that also have unique needs versus domestic companies. So those multinational companies do need to be served the world over in a specific way versus a domestic company that may have a more finite ecosystem that a local company like ours can serve. Because we are not in Europe, because we are not in the United States, because we are not in Asia, we need to partner with companies that have a more global footprint, that need to raise the bar on the services that are available for the local subsidiaries operating in the Middle East and Africa. So we provide that connective tissue to the likes of Adyen, to the likes of Stripe and Checkout, to provide that local, if you may, relevant solutions to their global customers. And so by joining forces, ultimately, we're helping to expand the market and serve our customers better. And so why not? Right?
I agree, why not? But let me sort of I'm not challenging the question. Let me just ask a question. So is this something you're going to do more often? Right. And the second part of this question is, I'm assuming you will do this more often with an open mind that a number of these, or I wouldn't say a number of these, but some of these will possibly, cut the umbilical cord and go independent themselves. Yeah. And I'm assuming these are factored into your sort of thinking going forward?
Absolutely. And they would have cut the umbilical cord, whether it was network or any other partner that they're partnering with. And again, I think ultimately, if you take the view that all of us in the payments industry that are facilitating electronic payments, we have one fundamental responsibility as companies, which is to help economies grow and to help businesses grow in those economies. In fact, I'd say it's the inverse. You help the businesses grow, and when you help businesses grow, economies grow. And when economies grow, businesses thrive. So if you take that approach, then essentially when you make decisions on the basis that what's the best thing to do to help a customer's business grow. And if the best solution to provide to the customer is to partner with ecosystem players, and you called out a few, but we have hundreds of other partnerships that we have that are similar in nature, that provide services that are similar to ours, but yet we partner together. The ultimate objective is to help our customers' business grow.
Right. And I've got a very simple view to this too. When I first heard of this news, my reaction was very simple. These players are bound to enter the market. Correct. Right? If they're not going to find NI as a partner, someone else, they'll find somebody else, right? And it's better to have a smaller percentage of a pie than have no percentage of a pie.
Thank you. That's the economic rationale. Yeah, well, you nailed it.
Yeah. So yes, one can say that you've let competition through the door, but it's not a door that you can ajar, right? It's a door which can be opened, right? You can't keep holding.
It's not in our control, right?
Exactly. Yes. So it's not in control. So that's kind of how I rationalize. It's good to hear it from you, and it's very grateful of you to give the credit to your predecessor, because you're correct. It actually happened before your arrival in time. You talked about alternative payments, right? The vast majority of the electronic payments still sort of rides on the rails of Visas and MasterCards. But we're starting to see some early days of alternative payments, right? Very, very early days. And actually, funnily enough, some of those alternative payments are still using the Visa and MasterCards in the way they collect payments, BNPL being one example, right? Let me ask you an honest question as a commentator of a market, maybe not as the CEO of Network International, if you can sort of wear those two hats. Do you really see alternative payments take hold again in a market like the UAE before we sort of start looking at other markets? And Africa is one which I'm very interested to hear your view on rapidly. And if so, then which alternative payment do you really see? India is all about UPI and sort of faster payments. There are other markets where, they have their own local schemes, China being one, Russia being one. How do you see it play out in this little sort of small market called UAE?
Yeah, sure. Actually, UAE happens to be one of the more, as you mentioned in your opening, I've had the pleasure of serving multiple companies. I've also worked in about 10 geographies prior to coming to the UAE, lived and worked in those geographies. And I'd say that UAE, to the point I think you're making, is a highly competitive and sophisticated market in more ways than one. And we can talk about that endlessly. But the answer to your question is, I think, is a triple yes. I'd say alternative payments have a significant role to play in, again, the growth of businesses and the growth of economies. And that's where companies like ours come in. Ultimately, our job is to make sure that any retailer or anybody who is in the business of selling goods and services is able to exchange it for a store of value. That store of value could be an AED, it could be a dollar, it could be a Canadian dollar, a pound, it could be air miles, it could be telephone talk time, it could be anything that has a store of value that is electronic.
Cryptocurrency.
Cryptocurrencies, absolutely, right? And so that's the business we're in. We're in the business of helping our merchants take payments in exchange for goods and services. And so if you take that view, you will, companies like ours, and we offer, I'm going to say roughly about 25 different stores of value that our merchants can accept. So for example, digital wallets like Alipay and WeChat Pay, local brands like RuPay, like Misa from Egypt, Mada from some Saudi. UAE also happens to be in many ways the center of the world. This is where people from 200 countries live. This is where people from all over the world come to holiday, etc. It's a great experience. And so our job is to make sure that wherever you may come from in the world, you're always able to live the life on your terms without having being constrained by a payment type. And that's where what we call alternative payment types, lovingly as a collective, for multiple brands, for multiple form factors, whether it's a digital wallet or a direct connect to a bank or cryptocurrencies, as you said. Ultimately, it's about making sure that the merchant has a smile on their face because that cupcake that they were trying to sell or the bag of chips that they were trying to sell has flown off the shelf. Right? And that's where, so the role of alternative payments comes in. And companies like ours are working very, very hard to enhance the number of electronic payment stores of value that can be accepted at any point of sale or online.
So obviously, a key part of that is the infrastructure play, right?
Yes.
So obviously, you're at heart a processing organization, which is infrastructure is a key part of it. So let me ask you a question. Maybe it's not a part of your strategy. Maybe it is. Maybe you don't want to answer this question, right? So we are all kind of waiting open banking, open finance to come into this market, right? And that will unlock or unleash, whichever word you prefer, a need for infrastructure provisioning, right? And we also know that as a part of open banking, one of the most common use cases is payment initiation or payments related activity, whether it's B2B, B2C, right? Do you see yourselves migrate into that space? Do you see yourselves becoming open banking enablers in terms of infrastructure players? It's not something that I saw in your annual report. Maybe I didn't read it deeply enough. But is that something where if I was to put, ask you to look into your crystal ball 5 years from today, it is an area where a network would operate?
So this is a very well-kept secret at Network. We should talk about it more. And the fact that it doesn't show up in our investor decks or annual report, shame on us. But we're already there, Arjun. So let me explain how. I mentioned that Network is also in the business of provisioning 20 million credentials through 200 banks in 50 markets in Africa and Middle East. Some of our customers are traditional financial institutions. Not all are. So some of them are new fintech, some of them are MNOs, some of them are retailers who are issuing prepaid products or digital wallets, et cetera, et cetera. So in a sense, because banking is a regulated activity, and many of these companies that are providing these services are leaning off the capability or let's call it the license of the bank, but require modern infrastructure. That modern issuance and what we call provisioning, credential provisioning infrastructure is provided by Network. And like I said, we are in the business of, currently we have a 20 million credentials under management. If I was to hazard a guess, I'd say roughly 20% of those credentials are issued by non-banks, by, in fact, challengers to banks is one way to think about it. The other way to think about it is fintechs. The third way to think about it is open banking partners. Because in effect, what is a fintech? A fintech is leveraging some of the assets of open banking. It may not be everything that open banking represents, but it's a subset of what open banking represents.
Totally.
Yeah.
Totally. So let me put some words in your mouth. Are you guys going to inorganically expand, buy out some of the infrastructure players like the network, like the MasterCards and Visas have, to enhance the infrastructure player, or are you going to build this in house, or is it purely a partnership strategy, or as someone will say, it's all of the above?
I think that would have been my response. All of the above. We would look at acquisitions. We have been an acquisitive company.
Yes,
as
you
know.
have.
EMP
Yep.
a few years ago, which is, you can't tell the difference. Everything's NI now.
Yeah.
DPO, which I'm sure you'll have some questions on.
I do. That's the next one on the line.
Coming up soon.
Yeah.
Is another company that we've more recently acquired. There'll be others. And I think, Arjun, the point is that we look at buy, partner, and build as three equally weighted pillars. What we're interested in is the fastest return on invested capital for our shareholders, right? And doing what is the most efficient and the best way to serve our customers, right? If we can build it, and we believe building it is a better way to serve customers than acquiring a certain set of capabilities, then that's what we'll do. So I'm not sure I can answer that question at this point in time, but we look at all options.
No, and that's fine. And my point was to actually just understand that, is that in the mindset? And obviously the answer is yes, and that gets it. So we come to DPO, right? So it was very good to hear. I obviously read your latest investor report that DPO is performing above expectations, right? So 2 questions.
Yes.
Right. What next for DPO?
Sure.
In terms of taking it beyond the countries that it's in terms of the core proposition, and then what next for network in Africa?
Sure. So let me answer the first part of your question. I'd say DPO started its journey in the e-commerce space as an online payments company, still is an online payment company, but essentially has the potential to be a unified commerce company.
Sure.
Right? When you start from online, it's much easier to gravitate into the offline space. And as you know, network has a long history of serving customers in the offline space for a while. So when you put the assets of DPO and network together, you're looking at a unified commerce proposition that we'll be launching soon in many of the DPO markets, but starting with the South African market, which is the largest footprint of DPO currently. So that, I think, is something that you can expect to see in the near future. I'd say some geographic expansion. DPO is already in 20 markets in Africa. There's many more than 20 markets. We know, let's call it roughly, give or take, 50 markets in Africa. So there'll be some geographic expansion. Though I have to say that in the markets that we're in already, in the 20 markets that we're in, there's plenty of room to grow.
I would imagine
in terms of market share. Now, in the online payments, it's anybody's guess because information isn't perfect, but we believe we have more than 50% share in South Africa, but we're clearly nowhere in terms of share in the other 19 markets that we're in Africa. We certainly, if you know how to compete and get to that level of share in the UAE and that level of share in South Africa, the question you have to ask yourself as a company is, why not have the same level of share in some of the other markets that you're operating in? So we are going to be going after share in some of the existing markets, but we will open new markets in due course.
So give us a little bit of tip. So how is business different in Africa? So how do you do things differently? Is it different?
Every market is different, right, Arjun? I mean, even Saudi Arabia and UAE, neighboring markets.
Yeah.
And maybe you'll come to Saudi.
So
and,
what's the secret sauce for Africa then?
I'd say it's recognizing what's common, but also what's unique. So I'll give you some unique characteristics. Typically, whether it's the local interbank clearing system,
okay,
or if they have a domestic brand, then you have to recognize that the domestic clearing system and the domestic brand are going to survive and in fact thrive in the long term.
Yes.
So integration into the domestic clearing system, interbank system, and into the local domestic payments brand is extremely important. And without doing that, I don't think anybody should expect to succeed in any market. Mm-hmm. So that's something that we're very, very focused on as we enter a new market. Then I'd say integration with the mobile money operators. Mobile money in Africa is a force to reckon with, as you know, right? Not quite so in the Middle East. So you're asking what's the difference? If we enter any new market in Africa, the first thing we want to do is integrate with the mobile money operators. So I would say that Actually, in Africa, you had raised the question about alternative payment rails. In Africa, I'd say APMs are the core business.
Totally.
Right? In a manner of speaking.
Totally, yeah.
And you have to recognize that, and you have to build your business around the APMs and the core being APM, and then do many of the other international brands, etc., that you're also doing. For example, Alipay, WePay, you talked about RuPay and a few others, whichever ones they are. Because people are still traveling into Africa from all over the world too. Tanzania, Kenya, South Africa, to name a few markets, Botswana, that sees a lot of international investors. So we are very focused on enabling the domestic payments infrastructure and enabling the cross-border payments, in addition. So I think some of the challenges that payment companies face is when they kind of focus on the cross-border piece and they kind of don't focus enough on the domestic piece. We are very much from the Middle East and Africa for the Middle East and Africa. And so for us, the domestic payment infrastructure almost becomes the first, port of call for us to enable, even before we go after the international flows.
And again, so it's a question. Obviously, I'm not going to work the numbers out here because I can't at the back of the fact packet. But if I look at 5 to 10 years ago, I can see your African business actually be bigger than what you might actually have in the Middle East.
I would not argue with you on that score.
Which basically means that there's actually going to be a massive shift in the way the management of the organization looks. Possibly, is there an intention to create a parallel headquarters in somewhere in Africa to sort of lead that charge?
So let me give you an interesting piece of information. Our UAE, we have 1,700 employees in the group. Less than 50% of our employees are based in the Middle East. More than 50% of our employees are based in Africa. And our hubs that they're based in are Egypt, Nigeria, Ghana, South Africa, and Kenya. We also have employees based in about 20 other markets, but we have a hub and spoke.
These are the hubs.
Capability set, and these are the hubs. In each one of these markets, we have roughly 200 plus people.
All right.
In the hubs.
Excellent.
On the ground, which keeps us locally relevant, right?
Yeah, and
you're asking how do you
and that was the point.
Address Africa.
Exactly.
You have to be locally relevant.
You cannot do the seagull. Yeah. You cannot do the seagull fly in and fly out. I've seen a lot of companies try. A lot of companies regressed, I think, during COVID. I still disagree with that strategy, right? Irrespective of what line of business you're in, especially in your line of business, especially trying to solve the domestic problems and understanding the domestic ecosystem. So let's talk about the kingdom, right? We had a brief conversation earlier today that you're making some very good progress with setting up shop, if I may use that term, in the kingdom. I guess my question here is what's going to be different about how you're going to do business in the kingdom compared to the UAE? It doesn't have to be, but if it is, and sort of what makes you feel comfortable that you have a right to play and win there in a market where there are a number of players, right? Yeah. Sorry for being very straightforward with those questions.
It's the right question to ask. There's never a bad question. There are only bad answers. So let me try and give you a decent response. We are very excited about the prospect of growing our business and serving the market in the kingdom. We're fully committed to doing that. We've made a reasonably chunky capital investment in setting up our technology in the cloud in Jeddah with a backup in Riyadh. So all our processing, our data management will be done on soil in Saudi Arabia. We built an office locally. It's led by a captain of industry who's a Saudi professional who's worked at the central bank and worked in commercial banking with one of the top 5 Saudi banks and has a stellar reputation for being, a great leader and a great practitioner of payments in Saudi Arabia. And he's building a very talented team, a fully Saudi national team. So, we're excited about the fact that our team will be, locals, highly talented locals. We're bringing our full suite of capability from the UAE to the Saudi Arabia with significant enhancements, right? Because we had the opportunity to start from scratch. So you don't take some of the legacy stuff that you got over a period of time. You're able to modernize it, and when you take it into a new market, so it's a highly modernized capability set. And what we're hoping to do is, help the banks grow their business, help merchants grow their business. And our pitch to the banks is, look, there's many ways for you to grow your business and to compete. For example, branch infrastructure, brand, product quality, service quality, pricing, et cetera, et cetera. Let us be your operations and technology co-investment partners to help serve the marketplace better, to help serve your consumers better. Essentially, what we're offering the Saudi market is payments as a service, right? And you pay for only every transaction that we process, and you don't have to make the capital investments, the hundreds of millions of dollars that go into building the infrastructure that sits behind a payment service. We will take the load of that, and you come on over, make the best use of that infrastructure, and provide your consumers and provide your merchants with, with excellent customer service and a consumer experience. And that's the role we intend to play. We're approaching it with humility. We're new to the market. We learn a lot of lessons as we establish our business in the market. We're here to learn. We're not here to just contribute. We'd love to believe that we can make a contribution, but equally, I think we as a company serving the Middle East and Africa will learn some valuable lessons from the Saudi market because of the nature of the market. And we hope to take those learnings to the other markets in which we're serving customers.
Yeah, no, I like that. I think three things I take away is that one, it's, you don't have to build anything from legacy. Very important. I like the fact that, you make the point about being sort of humble and sort of 2 ears and one mouth. So you're going to listen more than you're going to talk, which I think is quite essential. And I think, as you said correctly, it's not just what you're going to take away from the Saudi market to the other markets, but actually you have some good practices from other markets that you can take into Saudi. My last question, I'm conscious that I've horribly overrun, but this one just popped in my head. So a number of your competitors, right, in different markets, whether it's UAE or otherwise, who are either spun out of banks or are still resident within the bank in some form or the other. Especially if I look at the acceptance play, not the issuance play. We all know that margins and acceptance are thin and arguably under more pressure. God only knows where interchange heads next, right? They're going to be leveraging their banking relationships, and especially with the, I guess if I may say, the SME merchant segment, where they'll try and bring banking products to bear, right? Are you guys planning to do any of that, or do you want to be a pure play sort of fintech which focuses on processing, acceptance and issuance payments?
Yeah. So the good news is that network has learned to be in business, survive, and compete for the last, I'm going to say, pretty much close to a decade without being part of a bank. So
yes.
We've developed some survival and competitive skills over the last 10 years, yeah. Right? Give or take. Having said that, I think ultimately the point you make is the right one, which is transaction processing is being commoditized at a very rapid pace. And the revenue and the ability, therefore, for companies to continue to invest in technology and enhancing its services and helping businesses grow is not going to come necessarily from the transaction, but going to come from the value-added services that are provided to a merchant and to a consumer. And Arjun, I'm pleased to tell you that we do offer a range of value-added services, whether it's data services, information services that help merchants benchmark their business to their own business in the prior year, prior month, prior week, or to a competitor set without naming the competitors and making sure that there's anonymity. We also help them benchmark themselves against their competitors. So that helps them think about their businesses in more ways than one. We also offer lending for our merchants based on transaction flows. We've partnered with multiple banks, and so merchants can have access to working capital finance, and then the repayments on that working capital finance are deducted from the flows that we owe the merchant. And last but not the least, we also help our merchants sell product through buy now, pay later partnerships that we have with buy now, pay later companies. So the point I'm making is there is nothing an independent payments company cannot do.
Agreed. It's
that can be done by a bank. You just have to have a flexible mindset.
Yeah, exactly.
And you have to always tell yourself that there is a purpose for which you exist, and that purpose then guides your direction, which is we're here to help businesses grow and to help economies thrive. And if that's our North Star and we keep focused on that, we will do whatever it takes to serve our customers well which in effect means that we will be competitive, if that makes sense.
I think an open mind and the fact that there is enough to learn from, and actually, fortunately, for in your case, having the capital to deploy, I think is a great combination to have in three. Nandan, I want to thank you. I apologize. I've overrun. It's a topic which is very close to heart. I look forward to our next conversation. I'll be very, very keen, and I will observe your growth in Saudi very closely, because I think it'll be an interesting case study that you're setting, because there aren't many, with all due respect, I think UAE-based or headquartered businesses who have gone and necessarily stolen the show in Saudi, but there's no doubt that you guys will achieve it. So with that, thank you. Thank you for coming in.
Thank you, Arjun.
And I really appreciate you taking our time.
For giving me the opportunity to speak to your viewers. I really appreciate it. Thank you.
So thank you, everybody. I hope you enjoyed this conversation with Nandan Mer, who's the CEO of Network International. I think we talked about UAE. We talked about Saudi Arabia. We talked about Africa, e-commerce. I think there's a lot which was covered. I think there's definitely a part 2 to this, which we'll try and cover in the second season. But for now, I'd like to say thank you and goodbye, and see you next time.